Hello, welcome everyone, and thank you for joining our webinar discussing third-party risk management with the board with our special guest, Bryan Littlefair, who is the CEO of Cambridge Cyber Advisors, and also joined with us today is our very own Vice President of Third-Party Risk, Brenda Ferraro. My name is Amanda Farina, wannabe TV show host, but also your business development rep here at Prevalence. I have a couple of things to go over before we get started. First and foremost, everyone is muted. Nobody, not a single soul ever enjoys background noise, so we've made that official to just mute yourself for you. But even though you're muted, we really do want to make this an interactive session, so we encourage you to submit any questions you may have in the Zoom console while you are viewing this incredible webinar. And hopefully, time permitting, at the end of the hour, we'll address those questions in a Q&A session. Today's webinar is being recorded, and we plan to deliver that recording to your inbox by tomorrow to send to all of your friends and coworkers and to review it over and over again at your leisure. Alrighty, well, that's all for me for now. And at this point, I'd like to turn it over to Bryan. Thank you both so much for joining us today, and please take it away.
Thank you very much, Amanda. It's great to be here, and thanks very much for the kind introduction. So,
of course.
Just a little background on myself. So, as Amanda said, I'm currently the CEO at Cambridge Cyber Advisors, which is a consultancy company based in the UK, and we tend to work with the larger brands and organisations on their security strategies and helping to resolve some of their security problems and issues. I think previously I've led technology teams and security teams in large organizations such as Vodafone, Aviva, and others, and had a specific focus in the telco sector and financial services, but equally helping to support certainly some of the UK public sector organizations as well. So in my current role, I have the privilege of not just working for a single company, but working with lots of different organizations and spending a lot of time with boards and board members. And one of the things that I've personally noticed is an increasing concern around the risk of third parties and the risk that they present to the organization, but equally an appreciation of the understanding that this is a really difficult risk to quantify. It's a very complex space. And personally, having been accountable for third-party assurance in all of my security positions, I really wanted to just today share some of the knowledge and experience on the approaches that I've personally taken. And it's great, obviously, to have Brenda on as well to share some of her insights, and we'll feel free to pitch in, Brenda, whenever you like. I've been accountable for third-party assurance in all of my security roles. And it's one of the key lenses and risk metrics I always factor into my security programs. And what we are seeing today, as I said, is boards starting to take a real keen interest. So we're going to be starting to help set CISOs up for success so that they've got the right metrics, the right capabilities, and they can answer that question when the board comes knocking. So I want to set the scene a little bit and obviously just frame what third-party assurance is. We've already mentioned that third-party assurance is hard to do. It's complex. We need to recognize that. It should be global, and therefore it's a very big initiative. It's not uncommon for organizations to have 1,000, 2,000, 3,000 different suppliers. And each of those suppliers ranges from people that are processing data on your behalf and have access to your customer data, all the way down to people that are procuring food for the kitchen or kitchen utensils. And each of those different suppliers have different contracts. They have different relationships with your parent company. There's different connections. And as your organization continues to grow, its reliance on those third-party suppliers is only going to increase. And it doesn't always go to plan. I think organizations can no longer rely on saying we're safe and secure, we're not going to have any incidents, we have a zero tolerance approach to security issues. It's a lot more mature to recognize that things can and will go wrong. And it's how you actually react in those instances is how you're going to be judged as a success or a failure. So we've got some brand names up here that people will recognize, and the big household names can have challenges as well. And actually, in my opinion, bigger the brand equals bigger the target. So they have to obviously be on their game from a security perspective. their supply chain factors into this equation drastically as well. I mean, just looking at some of the organizations up there, some of them manage large franchise operations, some of them, are a parent company and have lots of satellite organizations around the world. And keeping those organizations running behind the scenes, there are a myriad of thousands of different suppliers. And that the job of governing those and getting the right assurance and security over them is a really difficult task. But if the big names struggle with this space, it's fair to say that we all can learn and we all can do more and actually improve the way that we manage third-party assurance.
I think what's interesting about what you're saying, Bryan, is that I'm starting to see that suppliers are even more than 3,000. I'm hearing numbers like 14,000 because of the fact that they're increasing from data to other products and services from other companies. And I like how you talked about we're looking towards making sure that we are bringing information to the board about what's happening proactively, but we're also seeing historical gotchas waiting in the background. So I'm interested to see how you address that moving forward as well.
Yeah, and I think that's a really important point, Brenda. It's when organizations mature their approach and start to get greater insights on suppliers, organizations are seeing risks and challenges that have actually been present in their organization for a significant amount of time, but it's actually that switch the light on moment. And you'll see, a key theme throughout the presentation is increasing that maturity, which is getting access to broader data sets. It's, driving automation. It's making things more proactive and real time. And ultimately, that's the key trend where technology is going, and security. And ultimately, this space in some organizations needs to catch up, right?
Completely agree.
Great. So why do we actually need third-party assurance? So, I've picked 6 of the key themes that I think are why organizations need third-party assurance. And obviously we can, people feel free to challenge these in the Q&A at the end. And Brenda, really great to get your views as well. But I think, one of the key things is regulation. And regulation adds to the complexity in any business, especially if you're a large global business. But you absolutely have to comply to the law of the land where you're operating. I think, when I was the CISO at Vodafone Group, which included Verizon, one of the challenges I faced is we were operating in 72 different countries. We had 72 different regulatory regimes. Regulators don't talk to each other in a greater or lesser extent. So the requirements to comply to those regulations are different around the globe. But regardless, you have an accountability to effectively assure that supply base against an ever-increasing list of regulations. So investing in tooling that can help automate that process for you is definitely an advantage going forward. And I think from a risk management perspective, when we're relying on third parties for any part of our solution, it adds a component of additional risk. It's something that's being done outside of your organization. So what happens if that solution or service isn't available due to something that they're having an issue on their side? What permanent connection do they need into your organization to deliver that service? Do you need to connect networks together? Do you need to onboard people from their organization into your organization? And what is their current approach to security? Is it good? Is it bad? And in the initial engagement, these are all unknown. But actually, we need to drive that clarity to effectively support the business, because it's the accountability of the function performing this activity to bring clarity. The business wants to work with certain suppliers or they want a certain outcome, but it's how do we navigate the complexity of these various different topics to give clarity over the actual risk of doing business with that supplier. And I think that's a key aspect of supporting business decisions. Each business unit within the organization, whether it's global or not, they will want data and metrics from the team performing these supplier assurances. They'll want insights on how the relationship is functioning. They'll want data on the performance and the KPIs for that individual account. They'll want to know what impact, if any, external threats or things that are happening in the broader environment has had on that particular organization and their ability to deliver services and solutions. And really there, I'm thinking of the COVID-19 world. Many supply chains have been disrupted by people working from home, manufacturing's been disrupted, etc. So the ability to model potential impacts on your ability to service your clients is really key. So we're not just looking at security here, we're actually supporting better business decisions going forward. And I think, you know, certainly living in the security world, compliance is something that I live and breathe every day. And I think there's an ever increasing number of compliance requirements for the business to adhere to. And it's fairly typical, certainly in the European construct, for the CISO to manage a large percentage of this within his or her remit. But now also with a third-party assurance, that remit is extended into the supply chain. And you're now also accountable for addressing compliance issues and challenges within the organizations that you're working with. You have to make decisions on who needs which type of compliance or certifications, depending on the service that you're procuring. What compliance is good enough for the type of service that we're actually buying, as well as actually making risk decisions and risk calls, or requesting the organization to put compensatory controls in place for any gaps that you feel they have. They may not agree, but if you feel that they're not complying to something, to your policy and standards, etc., you want to see some compensatory controls put in place. And that supplier footprint is ever increasing, so that challenge becomes broader day and day. I think from a governance perspective, my personal view is the customer always comes first. I think the customer has put in place a trust relationship with you. They're buying a product or service from yourself. And we need to recognize and acknowledge that it's us as a company that have decided to introduce other suppliers into the mix. We're perhaps giving them access to that customer data. We're maybe asking them to deliver some of those services on our behalf, like call centers, etc., where they need access to that customer relationship data. So we have to ensure that we've put the right level of governance and insurance over that, so that trust from our customers is absolutely front and center in our minds and remains protected at all times. Because if that falls by the wayside, that's where we see problems and issues creeping in. And I think quality is one that I personally advocate as a key criteria to track and measure as well. So if we're not constantly, and I mean in near real time, measuring the quality of the service that we're delivering to our customers, and things can go wrong in our supply chain. And obviously this is different sector by sector. It's completely different for an IT organization over a manufacturing organization, but certainly understanding in detail what those impacts could have on you is really important. But it can have a massive impact onto your brand. Suppliers may be hacked or compromised from a security perspective, and that may be an avenue back into your organization. But a real good example that I like to use is the horse meat scandal that was prevalent across Europe in 2012. Organizations had outsourced the creation of processed foods like lasagna, burgers, sausages, etc., to other organizations to produce on their behalf. But horse meat was introduced into that supply chain, unbeknownst to the parent company, and they continued selling it under their brand. But ultimately, they were selling horse meat to their customers. It was unidentified, unlabeled, but actually they are and will remain accountable for the quality of that product. And a whole part of that comes under that governance regime. I don't know, Brenda, is there anything that you want to chip in on there?
I think that with all of these 6 fundamentals, the board's really looking at your risk tolerance and your appetite, and really how to reduce those risks. And I'm thinking that from a risk management perspective, we're starting to see a shift and a trend on not only do you have a control in place, but how effective is that control? Or if the control is not in place, what compensating control do you have? And if we go into a little bit of the weeds, I'm specifically thinking that visibility and transparency is going to be key, so that they can centralize all the risk source intelligence that I'm sure you're going to be talking about a little bit more, so that we would be able to tell the board from an overall picture, here's where we are with compliance and governance and risk management from an elevated risk source technique. And then I'm also wondering, this is kind of a quiz test for you to see if you agree or not, but we've got compliance officers and risk officers and privacy officers. Do you foresee that we might have an outsourcing chain officer or a supply chain officer in the future, maybe?
I think it's definitely going to go in that way. And I think, you know, the evolution of the whole security skill set, you know, the language that we often talk at the board is purely risk, right? So the bits and bytes and the technology are all consolidated up into that risk-based view. But I think, you know, we've seen the creation of, as you say, data protection officers. We've seen the creation of chief digital officers, etc. And I think this is such a broad space, you know, with such broad ramifications if things aren't done correctly. I think it's sensible to appoint an individual who is accountable for solely this area. I can certainly see it going that way.
Well, you heard it coined here by Brian and Brenda, so it's done.
Yeah, we'll get it. Okay, so moving on to the next slide, which is around, how do different companies approach this challenge? And, I see such a broad mix, and I see very well established household brands who you'd expect to be very mature in this space, actually pretty much down near the bottom. And I see the opposite. I see small organizations who are starting up, but very reliant on technology, etc., all over their supply chain. So you can't really tell the maturity of an organization just by looking at its brand. And actually, it's one of the things that I enjoy working on a day-to-day basis with such a varied list of different clients in different sectors. I get to see that myriad of different approaches. But, boards and executives have a role to play here, and it fits into that conversation we were just having as well, Brenda, because they set the tone at the top. They set the expectations. They outline to the executive team, and the executive team outlines to the VPs and the various different people below them, the culture within that organization, the level of maturity that they want to achieve in this space. And so I think that, boards starting to sit up and recognize this as a key space, and perhaps even the appointment of the role that we've just coined, that will start to drive the maturity of things up. But, we see people at the very initial stage of course, no one is doing nothing, but, some are doing very little. The business has pretty much free rein to make relationships with who they want to do, regardless of the potential risks of, brand damage or data loss, or even potentially doing business with politically sanctioned individuals or being involved in money laundering, etc. These all form part of the risk decisions that we have to be able to quantify. So some organizations have, very little control, and they have no view on the current risk exposure that presents to the organization. So you definitely don't want to be down at that scale. I think coming up the maturity, we start to go into the managed area. There is some form of engagement with the supply chain. There is a process that we can identify and see, but actually it only happens periodically, normally in a reactive or forensic capability. Maybe when something's gone wrong, we start to look at the supply base. And again, that's really not where you want to be in my perspective. And I think when we start to hit the define, that's where we start to see, the proactive nature of things starting to emerge. Suppliers are evaluated pre-engagement, which is what we want to see. The business wants to work with someone and they actually engage with this function or area to do the due diligence and actually understand what are potentially the risks of working with this organization so that they're aware. And equally, the client that's bidding for this information are aware that there's going to be some processes, some hoops that they're going to have to jump through. And they're going to have to pass this stage in order to win the business. And this is where we see our friend, Microsoft Excel coming into play normally, right, in the less mature organizations. And we start to see, very complex spreadsheets being produced that are loosely aligned to the control framework of the organization. And you start to build a bit of a cottage industry around the assessments and the analysis of responses. And, once you start to scale that up, it really becomes a bit of a challenge. And then when we start to get into the integrated space, we still see that due diligence being performed, which is good. But now we have, an extension of our internal security controls actually being defined in the contract. So we start to dictate to our suppliers how we want them to work. We set the tone of that relationship going forward, and we clarify the expectations on the suppliers. So they're very clear what we need from them, and we're very clear on our expectations from us as well. Typically what we'll see in this stage is, the creation of a very long list of supplier questions. No two are the same. It's very individual between different organizations that have kind of home brewed their own solution, if you like. And again, we normally see the controls being mapped into Excel. Some might have a GRC platform that they're starting to use as well. But equally, these are being shared with the supplier, and they're submitting back in a manual process. And, it's really the job of the analysts that, I really feel for to read through each of these questionnaires and to try and manually produce some form of a risk-based decision coming from that. And, that's a challenge when you scale that up against a global organization. And it's really when you get into the optimized space, you know, that we obviously have the due diligence, we have the contractual controls, but now we start to have supplier reviews. We actually spend time on forging relationships with our key suppliers. We've introduced tooling, we've introduced automation. We've actually shifted the onus on all of the legwork being on the internal team on assessing onto the suppliers providing information for us to review. The tooling can help obviously make the risk-based decision, which is a great value, and we can focus on what's working, what isn't, and ultimately what is the plan to remediate to get that supplier where we need to be. Brenda, have you got any views and perspectives on that?
I really like the way that you have defined as the center point of this approach, because seriously, when it comes into a culture change, that's the exciting phase when people start to realize the value that TPRM provides to other business units, that it's not a roadblocker, it's actually supporting, making sure that the whole company stays as risk reduced as possible. And then the termination controls in the integrated phase I'm also starting to see get embedded into the contract. So if an engagement is supposed to end and there's data involved, we're seeing an uptick on those contracts, including what should happen to that data so that it doesn't become a gotcha at the end of the engagement, or even down the road 4 years or 5 or 6 years later when it might be found. And optimize is where everybody wants to be, but without going through these 1, 2, 3, 4 phases before it, it becomes harder and harder. So it is a good methodical approach.
Right, no, I completely agree. Okay, so on to the next slide. You know, what are some of the problems that people encounter? And, you know, this is really my views and perspectives of things that I've seen out there in the real world. So some may resonate with you, some may not. But, you know, if you're not really up at that optimized level, these are some of the issues that I've personally experienced. I work a lot with security teams around the globe, and I see them becoming swamped. You know, it's information overload. They're managing complex questionnaires. They're resource constrained. They have too few analysts in order to, you know, get on top of the information and ahead of the curve. They're very reactive rather than proactive. They're managing a complex list of remediations and compensatory controls. So the vendors that they've managed to assess and they're asking them to remediate, then they've got to track the progress of that. And trying to drive all of that through, you know, manual processes, and then somehow give a view on the current status and the current risk. All of that analysis, it can actually take a month to produce the monthly report. You're far away from real time. And, you know, what that drives is, you know, tension in the rest of the organization. And this is typically materialized in my view, in the procurement function, who, you know, wants to push suppliers through their cogs and processes fairly quickly. They can view the assurance process as a bit of a blocker to doing business. They can view it as slow. They can view it as not transparent. They think that it's not repeatable. You know, if you put the same data in and you get a different analyst, the view or perspective can change. And, you know, they get complaints from the suppliers that they're working with within their footprint around why do we have to complete this process? It's a lot more streamlined in other organizations, etc. So it can cause a bit of tension in that procurement side as well. And from a supplier perspective, I actually really feel for the suppliers. You know, if you put yourself in the shoes of I don't know, a Google, a HP, an IBM, etc., and you think about their customer footprint and the various different levels of maturity that we've just gone through. So some, they're proactively filling in a tool, like we'll see from Brenda later on, like Prevalent, you know, where their customer base can access the information in real time and all their questions are pre-populated. I suppose that's the target, that's the Nirvana end goal. But for other suppliers, you know, they're receiving different Excel spreadsheets or SharePoint sites to fill in. You know, they're all broadly the same, but asked in different ways, and different onus is put on different question sets, etc. So from a supplier's perspective, they've got to stand up a huge organization and team to front this assurance activity. And, you know, depending on the criticality of that relationship is obviously the level of detail and insights and audit requests that you get to perform. But I think, you know, the industry requires change. Certainly the security teams are requesting change. The suppliers want change to streamline the journey, and certainly the procurement teams do as well. And that kind of culminates in what the board are asking for. They want it to be real time. They want clarity on the current position. They don't want it to take a month to produce the monthly metrics. They need to be able to touch it and feel it. I think the threat angle that we're all facing changes externally to our organization on a daily basis. And therefore, so does the risk within our supply chain. And we need to be able to quantify and analyze that in near real time and not wait for that full Excel-based cycle to run. There's so many wasted internal cycles on gathering the information and doing the analysis when there is a better way to do it going forward. I think lastly, you know, the risk team, certainly prevalent in most regulated organizations, and they want to be able to see a consolidated view. This isn't the only risk that they're managing, but it certainly inputs into the broader picture. So where are the hotspots? Where are the areas? Who are our top 10 most challenging suppliers? And what can they learn from our best of breed suppliers and how they approach it? How do we get that knowledge sharing working across the community? And where are the gaps and challenges and what are we doing about them? And I think certainly any risk professional, they're not comfortable with gaps. They like to see a full broad view across their supplier base, and any gaps makes them completely nervous. Brenda, any perspectives there?
The one thing that I experienced when I was at a large insurance company is the problem that we had was we weren't able to say, we've got IT hygiene problems, not only internally at our company, but externally with our vendors and suppliers. So it's important that they start looking at that as a problem to solve as well. You know, just making sure that we're not in collection fatigue and we're extending the metrics to show here is an area of challenge for not only these vendors, but internally, and how are we going to address it together?
Yeah, I completely agree. And, you know, sometimes it can, the view of people actually creating these metrics is that, you know, it's difficult to pass up a bad message. You know, a strategic vendor that might not be performing very well, but is actually, you know, performing a strategic service to, you know, the company. It can be a tense time to actually say, look, things aren't working with this supplier. We absolutely need to address it. So I think that transparency and, you know, willingness to expose where issues are to improve things proactively is where we need to get to, right?
Yes, agreed. Be nice and know that everybody's working on it together. So we have to lift our security posture up together as well.
Yes, exactly. Completely agree. Okay, so the next slide in terms of, you know, what are the board looking for? Okay? And, you know, in my current position as a board advisor on security perspectives, as a CISO, I only got to attend the security section of the board. Now, as a board advisor, I typically sit through the majority of the board that's actually happening. So I get to see, you know, the breadth and scope that board members and non-executive directors have to cover. And I've got this great new appreciation for that role and recognizing that individual has to have, you know, expertise and knowledge in whether it's finance, legal, HR, recruitment, sales, security, risk, etc. So it's such a broad role to cover. So we need to help them. We need to simplify is the wrong word because these people are very smart, but recognizing the breadth that they've got to cover, we need to give them clarity of insights. We need to present information in a very clear way. Because where I see problems occurring is, you know, the information isn't being presented very clearly and they struggle to engage. They struggle to know how to influence. They struggle to know whether this is something they should be supporting or whether they should be challenging. They don't know whether particular KPIs should be going up or down. So when the board does actually come to ask what they're looking for, what I personally see on a day-to-day basis, I think they're looking for 100% coverage when it comes to third-party assurance. And a lot of organizations that I see that aren't optimized at the top end of the scale can actually only give a partial view when it comes to third party. And especially if you're in a larger global complex business, I think that a lot of them spend time with their big suppliers, you know, the Googles, the HP and the IBMs of this world, the people that are audited and go through the compliance regimes that they have to a lot by all of their various different suppliers. And, you know, a little attention to the ones in the middle and very little attention to the ones at the bottom. And the reason for this is they're resource constrained, they're running manual processes. But, you know, from a board perspective, that's not acceptable. And, you know, there are ways to overcome that, which we discussed with the maturity and the tooling. So the board don't want to see a partial picture. They want 100% coverage. They recognize that we're only as strong as the weakest link. And they recognize that we can be disrupted. We can be compromised by not just the big players, but actually our smaller suppliers as well. So they can't be removed from the equation. I think that they want to see the data segmented and prioritized in a lens specifically for them. certainly at a CISO level and at an operational level, you might be assessing or evaluating the supplier landscape in a more detailed view than you want to give the board. But personally, I've seen board reports that are produced in a size 4 font with all of the suppliers squeezed onto a slide in an attempt to create a heat map across our entire control framework. It's not readable, it's too large, it's too complex. And you're actually asking the board members to do the analysis in the room on the fly. And actually what they want is that analysis done in advance. They want that balanced risk view. They want to be able to understand, you know, where are our key hotspots, who are our suppliers that we need to work with on an executive level to uplift their current position, who is really critical to the success of our organization, because ultimately they're integrated as a key part of that success. And we need to get that security working holistically, not just within the organization, but also within our supply chain. So based on that, I think they deal with in facts, not fiction. They want real data that's been correctly analyzed using the best tools. And we'll get onto that in a few slides in terms of, you know, incorporating all of the available intelligence sources that are out there that you can integrate, but perhaps aren't utilizing to best effect. They want the best people, obviously, working on this with the greatest skill set. And they want that accurate and up-to-date position of where we are. I think in today's world with the, you know, the daily evolving threat and risk position, it's no longer acceptable to be 30, 60, 90 days behind that curve and actually waiting for your third-party supply chain data metrics to catch up, waiting for an audit report to come in. We need to get real time with this, and we need to be able to advance and take things forward. And I think, you know, what I advocate at board level is meaningful metrics, things that they can engage with, trend data that highlights, you know, the areas for focus and attention. It needs to jump off the page what the current status is. What are the successes? Because you should absolutely be celebrating them as well. But equally, what are the challenges that we're facing? How can they engage and support us? And how can they challenge us where appropriate as well? And I think, you know, lots of security dashboards that I've seen that are lower down in the maturity curve fail to get that level of engagement at the board and executive teams. They're too long, they're too technical in nature, and they don't focus on the outcome and the risk. And I think that certainly a lot of the communication from the security function and the IT function needs to start to communicate in the universal language at a board level, which is risk and finance. And I'm starting to see that transition, which is pleasing. Brenda, anything to add?
Yeah, I think that word transparency that's easily digestible, kind of using a one-page view, like a Tufte diagram, as you're saying, that's very specific to here's what you need to know and here's what's going to happen if we don't resolve it, is important, especially I had an experience where we did a incident scenario-based test, and we included the board making a decision of getting the CEO in front of a green screen to address the community on the incident. And they really brought up to us some post-mortem items about, hey, we don't even understand what you're doing in third-party risk or what the risk of the business is, in order to really quickly make decisions on, should we put the CEO in front of the community and what should they say? So really getting them so there's no invisibility to exactly what's happening across the landscape. And so I think that that's really telling as we move forward, is getting them prepared with the facts so that they know what's going on and can make decisions if something were to unfortunately go wrong.
Yeah, I agree. And, you know, it's also broader than third-party risk as well. It's the whole, you know, security function, or, you know, whoever's accountable for addressing the third-party risk. It's when you are communicating at that level, the clarity and the ability to present clear information with, you know, here's the action that's required to be taken, because ultimately you're telling them what you have done and you're asking for them to sanction that approach. You're not asking them to make the decision on your behalf. That's not what the board is there. They're accountable to the shareholders to give the governance going forward. It's the executive that are responsible for making that decision, but you need to outline why that decision is being made in the right approach, right?
Exactly. Segmentation is really important.
Right. On the opposite side of that, we're going to look at the CISO priorities. So, you know, I've been a Chief Information Security Officer for numerous organizations, and, you know, it's around how does my CISO priorities align with what the board is after and what we've been discussing earlier on in the presentation. I think, you know, if you boil up the accountabilities of a CISO, and this was told to me by a very good CEO at Vodafone Group, you know, ultimately the security is there to protect the brand. You know, organizations spend a massive amount on getting quality products and services that the customer will like. They spend a huge amount of money on marketing and advertising. And, you know, an adverse event in the security space, whether it's third party or other, can really damage that brand in the perspectives of customers. And we start to see, you know, certainly with the ability to move between organizations becoming a lot easier. When there is a brand impacting event, we start to see customers actually showing their protest with their feet and moving to the competition. So ultimately, the CISO is there, in my perspective, to protect the brand. And they're driving lots of internal capabilities and change programs in order to be able to do that effectively. But, you know, as I said at the beginning, you know, the third-party assurance is one of the most complex risks to quantify, but it can actually undermine all of the activities that the CISO is driving as well. You know, a negative impact in an event actually happening within one of your many thousands of suppliers can pull the rug out from underneath your feet. It can, you know, significantly spoil your day. A supplier can absolutely impact the parent organization where the relationship is with. So getting those insights and views and being proactive about that and actually recognizing that that can occur. And how do you go out and hunt that? And how do you go out and find those challenges and issues and put in those mitigating measures so that if the worst does happen to a supplier, the impact and challenges it can have on the parent organizations is restricted and limited. So in order to do that, obviously, we need to ensure effective risk management. We need to measure and quantify those risks. We need to ensure our controls, because typically you have your security policies and guidelines and frameworks, and they are extrapolated down into a set of controls and frameworks that need to be both design effective, so they're designed to operate in the right way, but equally operationally effective as well. Design is one thing, but how are they operating? Are they actually working in reality? Are they working as designed and making sure that the correct things happen or don't happen? And in my personal view, the third-party risk, you know, historically speaking, is very challenging to manage as we've gone through. Getting that true risk position and identifying those suppliers of concern from large, complex spreadsheets, actually running, you know, typically what is an annual process because of the number of suppliers that you've got to get through. And in lots of organizations, that actually takes a year to complete. You've got some suppliers actually only being looked at the end of that cycle, and actually there's big risks being uncovered. And actually they may have been your biggest risk all year, but you just didn't know about it because you've got such a large list of suppliers to run through. You've only just got to them at the end of the cycle. And that's where the automation and investment in tooling can bring that risk-based information a lot more near real time, so you can actually quantify that and react appropriately. And I think, you know, the regulation and compliance, you know, as much as it's growing, it's there for a reason. It's created to mandate an approach where the industry is seen at not exhibiting best practice. It's only going to increase, so, you know, it's not going away. And I think we find ourselves in a world of, you know, potentially over-regulation and over-compliance at the moment. And the CISO is having to manage a lot of that portfolio on their own shoulders. So I certainly advocate, you know, regulators and compliance regimes being international, especially in large global organizations. It certainly simplifies and make things a lot easier. So I think, you know, protecting the customer data, that's how I explain a CISO's role. You're protecting the brand, you're protecting the customer data, you're protecting the organization's critical data. So the CISO, in my view, has to be that first line of defense in protecting that data. And as we've discussed, you know, some of that data makes its way into the supply chain. Some organizations are processing data on your behalf. They're standing up services to actually, in all intents and purposes, represent you in the first line of contact with the customer. So that data is flowing into your supply chain. So even if you have a DPO, even if you have the privacy team, as Brendan and I were discussing earlier, the security team plays a key role. And I think, you know, in most job descriptions that I've seen, the CISO remains accountable for ensuring that those controls across the business relationships are fully extended into the third party. And, you know, in today's world, it's not just the third party, and that's where things get complex, right? You have the third party, you have the fourth party, you have the nth party. As things are subcontracted down, as things are pushed outside from third parties into other organizations as well, that spider's web of where is your data actually going, who's got access to it, where is it being subbed out, etc. So it becomes ultimately more complex, and again, a requirement for introducing the automation and the tools into the mix. Brenda, any perspectives on that?
Yeah, I actually have a question for you, because in some companies I have experienced that the CISOs are directly reporting quarterly or at least every 6 months to the board. Are you also seeing that as well?
I see it a lot more frequent, actually, and I see this change is different across the globe. I mean, we certainly see seniority of CISOs in the US being higher up in terms of the food chain, if you like. But actually the FaceTime of the CISO with the board in Europe is a lot more frequent. So it's not uncommon for the CISOs in Europe to have a standing agenda item at every board meeting. Whereas when I speak to colleagues and acquaintances over in the US, you know, as you say, it's a little bit less frequent. Papers and documents might be submitted in terms of reports and frameworks, but actually presenting personally up to the board and having a dedicated slot, you know, that's in my view changing to be a lot more frequent as executive teams and board members start to recognize the positive influence that an effective relationship with the CISO can have. And I think that, you know, one of the jobs of the CISO is to demonstrate the value that they deliver to the organization on a day-to-day basis, running key processes like this, rather than just, as we discussed earlier, Brenda, some executives view the CISO and the security team as a team that's rolled out when we're having a security incident. They maybe deal with that, then they go back into the background. And that's clearly not the case. They deliver significant value across the portfolio and actually enable the business to go faster. So it's around getting that executive relationship and getting the business to recognize the value that you give so that you can present things like this on a more frequent matter. I think that's really critical as well, right?
Yeah, I think that the value also would be being able to hear firsthand from the board feedback so that they could make the adjustments or enhancements to their programs underneath whatever realm they're controlling. So yeah,
Good.
I agree.
Okay, so looking at what options do I have to improve the approach? You know, we've discussed some of these before. There's some key themes in here, which obviously you can see that I really want to get across to you, right? So the first one is you absolutely have to leave Excel behind. I think that certainly in Excel, it has a place and its purpose, and I fully apologize to Microsoft, but it's not in managing third-party risk. It's not the best tool for the job. I see so many organizations still using it. It misses so many of the functions and capabilities that will drive you up that maturity curve, and we'll cover some of those later on. It's just not optimized for managing your third-party processes. I think, so we also need to segment or tier that supplier base. Some suppliers need a lot of our focus and attention depending on what they're doing for us. They have access to data, they process data on our behalf of our systems, or they have permanent access into our network. So we need to get good assurance that they're aligning to our internal approach on security, and that, you know, that their control environment is as we want it to be, and if not, we need to drive that and take it forward. But at the other end of the scale, we have suppliers that arguably aren't critical to us in the same sense as the word that we've just discussed, all have the same level of access into our environment, but we still need governance and assurance over them because things can change. And that's the thing with the third-party footprint. It's an ever-evolving landscape. One day, a small supplier in one country might be a big supplier in another. So we absolutely need to understand the footprint of that supplier in relation to our organization. I absolutely advocate a risk-driven approach. And what I mean by that is that we understand all of our suppliers and the potential risk that they present to our business. We know the controls that we should apply to them, and we can ensure that they have the correct assurance, and we've put the right KPIs and KRIs in place, and it needs to be global. As I said, it's a shifting sands beneath our feet from a supplier perspective. I personally have seen in security functions that I've managed, we haven't had a global view. We've seen a supplier tiered in one organization, but we haven't understood that that supplier is bidded for a piece of work in India perhaps, or in China, or in another organization. That information hasn't flowed down. and they've become a material supplier to the organization, so they're not getting the appropriate governance. And that's why it needs to be a living, a breathing process. And the way to do that is obviously to invest in tooling. We don't have to stay in the dark ages. We don't design manual processes in the rest of our security portfolio. We wouldn't say we're going to put a data loss prevention or a security operations center in and we're going to run that manually. We wouldn't say we're going to read everyone's emails to check whether there's any sensitive information in there. We wouldn't look at every bit of log data coming in from our IT environment to see whether it's relevant for the security operations center. So why do we persist in running a very complex data-driven process like third-party assurance using manual processes? We absolutely need to move and mature up and enhance that position. Brenda, anything to add?
I just like the slide because it is a great idea. So the light bulb is perfect.
Great, okay. So how do we get there? How do we get on that maturity journey? So tiering is really key. And, you know, depending on, typically we see 3 or 4 tiers in organizations. So segmenting that global supplier footprint so that we know who we need to spend our time with. And actually that's not always clear. As I said, you know, the amount of time you spend with a really big player who you can get clear information on, like SOC 1, 2 reports, etc. You can get their compliance regimes, etc. So you can get a good view of how they approach security. A lot of that information is publicly available. Versus a medium-sized organization that, you know, hasn't got the size and scale of the larger organizations, hasn't got the size and scale of security teams or the maturity, etc. So, but they're still a critical supplier. So actually your focus and attention might be better spent with those rather than the local organizations. And that is absolutely individual to your organization and how you deliver services. But tiering and categorizing your suppliers into the amount of time you want to spend in them based on the criticality of them, based on data, connection, how important you are to delivering that service for your customers, etc. That's really important. The coverage, as we've discussed, is the one I see so many people fall down on. And if you want to mature, you can't have partial coverage. You wouldn't be happy if your IT director said to you as a chief information security officer, we're only going to have antivirus on 50% of our servers. You therefore can't be happy only assessing 50% of your supplier base. You need to make sure that you've got that coverage by increasing that maturity and investing in tooling and again, pushing that onus from your team completing the activity, which is resource constrained, onto the supplier inputting that information into publicly available tools. And that's where the automation comes in. You know, you need to, as within other areas of security, automate that process as much as possible. Move away from the manual aspects. And again, that DLP and SOC example, you wouldn't do manual processes for the rest of your security portfolio. So why are you looking at doing it for third party? And I think as you go up the maturity curve, context becomes really, really key. So we need to start to augment that information. And this is where you absolutely can't do it with Microsoft Excel. You need to look at the various other information sources that are open to you, like the open source intelligence information flows on suppliers. What have they been in the news for? Is there threat intelligence data on them that's either publicly available or on the dark web, etc.? This all adds up to valuable insights and gives you context to them on a supplier. How seriously do they take security? Their policy and procedures might say one thing, but if they're carrying 3 critical vulnerabilities on their customer-facing website, that might tell you another thing about their, you know, their actual approach to security. So adding that context is really important. And ultimately that builds up, you know, an individual risk profile for every single external supplier. Again, something really difficult to do, if not impossible, on, you know, a manual Excel process. Getting that individual view, knowing the segment that they fit in, knowing what their current approach is to compliance, what their policies say versus what they actually do. That dictates, you know, the amount of governance that you actually need to put on them, and actually whether doing business with this supplier is the right thing. So Brenda touched on terminating suppliers. You know, if suppliers' risk profile moves out of your appetite as an organization, you have to look at transitioning away from that supplier. If they're doing things that, you know, don't map into your policies and procedures, then they're not willing to change. It becomes too risky to do work with that organization. And how do you actually move that away? But relationships become key through the maturity curve, building strong relationships with your suppliers. You know, as we looked at the maturity curve, being able to have dedicated interface points with your critical suppliers and actually holding reviews with them to track progress, celebrate successes, but equally to look at issues and how do we resolve them going forward. Okay, so the last slide from me before I hand over to Brenda to talk about, you know, some of the prevalent tool set. And it's around metrics. You know, we talked about meaningful metrics to the board, and, you know, I'd group them in 4 key theme areas. And I think, you know, metrics are fairly individual to the organization and certainly the audience within the board that are receiving them. But what I see is, you know, risk, threat, compliance, and governance. You know, risk needs to be balanced. It needs to be informed. It needs to be quantifiable, but most importantly, it needs to be repeatable. If you put the same set of data through, you want the same answer. And, you know, that's not always the case. Analyst A might have a different view to analyst B. So you want your tooling to support a repeatable view coming through that, and equally hinged on best practice frameworks like NIST, etc. And you need to be able to show how you're managing the residual risk. You can't get every piece of risk under management. There's always a gap. But how are you approaching managing that residual risk with compensatory controls? We talked about that threat piece, adding the context, bringing those intelligence sources on what's out there on the suppliers that you're using as part of your risk-based decisions. That's really, really important and something that I'd absolutely advocate going forward. Compliance is really key as well. You have controls for a reason. You have your security policies for a reason. You want organizations to be compliant, but equally you need to recognize that 100% compliance doesn't equal 100% security. You need to get below. A policy and a compliance statement says one thing. Reality is how do those controls work in real life? And that's where the threat picture can really help you as well. And the coverage, you know, I often see metrics on numerous sources. And my first question is, you know, is everything covered in this? Is this the full picture? And often it's like, no, we've got a 25% view at the moment. That's not good enough. We need 100% coverage across the environment. And we need to be able to show what's been looked at, what hasn't, and what are we waiting for, so that people viewing the information have that clear lens. Okay, Brenda, over to you for the prevalence slides.
All right, we'll quickly go through these because I want to leave some time for Q&A. But Prevalent is here to help you automate and accelerate your TPRM program. And you'll notice that there are some things that can be done faster. We can reduce manual labor, and we also can increase productivity. And it all loops into what Bryan has been talking about with providing transparency, removing the Excel spreadsheet fatigue, making sure that you have managed services for those companies that don't have a lot of resources. And so what we're doing right now is making sure that you have access to readily available questionnaires that are already completed that can be repurposed and recalibrated to your risk. We also do the hard work of the collection mayhem for you and do verification so that you can become more of a risk manager instead of a collection analyzer. And then we automate assessments and centralize that information to give you that 360 view so that you can produce reports and metrics that can go up to the board. The next thing that I want to just reiterate, we saw a beautiful slide with the light bulb. This just goes into a little bit more detail about not using spreadsheets. They're siloed, they could be ad hoc, they're rigid. And when Bryan was talking about having Excel go away and segmenting the scoring and looking at risk-driven approach to your third-party program and tooling, that completely goes along with visibility and efficiencies in this maturity of reactive to proactive. So you can kind of pick and choose some of those rectangles that would agree with the light bulb fashion that he was speaking of. And then finally, intelligence from every corner. We've recognized at Prevalent, it's been one of my quests as I advise companies on how to build their programs. Get all the source data that you can in front of you and make sure that you harmonize and normalize that so that you're not just looking at a portion of the picture and you can give that full picture to the board once you have it at your fingertips. So there's everything from being parts of networks or having information like credit reports of financial and business intelligence. A lot of companies are partnering with intel companies that only have one or the other. And so looking at everything together of course, will give you the ability to do easier segmentation, making sure that compliance, that's another thing. If I collect data from you, I want to be able to take that data and reflect it in a view that is digestible by the legal department or the risk compliance department, and not have to go ask those vendors. Bryan was talking about the time that they spent or do spend on getting information from multiple departments in one company, and they're all asking the same thing. So be one voice. And so with that, I think, Bryan, let's move into, I think, yeah, actually, Amanda, you're going to put up a polling question and then ask questions that we were able to receive. We've got about 7 or 8 minutes.
Yes, I'm going to put up a polling question right now. It's, are you looking to augment or establish a third-party risk program in the next several months? I ask that you guys just answer honestly. If it is going to be a yes, we'll be happy to follow up with you, myself included. I probably will be that person along with my team. But also wanted to keep in mind, everyone, as a reminder, we did record this session and you will get that recording tomorrow morning. We've had a lot of questions about the slides and a recording, so just FYI. But let's go ahead to that Q&A here. Our first question was, using a visual data map a good way to present the information?
Let me take a stab at that. And I think, I think, you know, using a visual data map can be a good way to present the information. It can also be an awful way to present the information. And I think it's, you know, it's fully dependent on the information that you're actually trying to present up. I think, you know, segmenting and getting an individual supplier view or showing perhaps a single control across your supplier base, that's fine. Trying to cram all of your suppliers onto a single page and, you know, get a representative view across all of your controls, I think your key messages are lost in that view. So again, limitations of a manual process over the benefits of using an automated tool that can actually graphicalize those reports and metrics for you in a really clear way to understand. That's certainly the approach that I'd advocate, right?
Yeah, and I think that context is important. So if you show them too much information, it becomes noise. So it's a good thing to have so that you can slice and dice, but you want to make sure it's the appropriate amount of data, just as Bryan has mentioned.
Yep, absolutely. Our next question is, what have you witnessed with onboarding all the existing vendors into an automated risk tool? What initiates this process? For example, business unit, risk management team, etc.
I think I'll take the first one, and then Brendy, feel free to add into it. I think, you know, I've experienced this several times. I've experienced, you know, certainly in the early days of, you know, GRC automated risk tools coming onto the market, and then trying to transition manual data flows and vendor lists, et cetera, into those tools and platforms can be a fairly complex journey. I think that, you know, things have come on a long way since that. And I think that, you know, it's a fairly simplistic task to achieve now. And actually what you'll find is when you actually start to use some of these onboarding tools, there'll be a huge crossover of the actual suppliers that you use already having information on the online tools and platforms. So they're already there, you're just not using it. And I think that, you know, the automation of pulling that information in can absolutely be achieved. And we see organizations succeed on that on a daily basis, right?
Yeah, and I would agree with what Bryan's saying. Don't feel like you're alone if you don't really have your universe of vendors or suppliers in one place. Make sure you're looking at what you have. Don't go into analysis paralysis. You can run threat intelligence on your list to start prioritizing very, very rapidly, and then engage with your procurement and sourcing and become partners with them. If you're running things from a TPRM perspective or vice versa in the UK, a lot of procurement organizations are the first to see those requests as well.
Great. All right, we have 2 more questions here. What is the best way of handling larger service providers, for example, cloud service providers? Many a times getting evidences to evaluate the control effectiveness is not possible. Major CSPs don't provide evidences other than references to SOC 1 and SOC 2 reports.
Yeah, certainly from my perspective, it always becomes a challenge. It becomes a bit of a closed door, and it becomes a bit of a trust us. We're a huge organization. We do everything right. And I think it's part of the challenge is getting below that data. And a key part of that is, you know, depending on the relationship with you have with that organization and the ability to influence. you're never going to really get the ability to walk into Google's multi-tenant data centers and produce an on-site audit. What you need to do is actually tap into platforms such as what we're talking about today and actually get the insights and the knowledge that are on there from a community. So as a single organization approaching them, you get a single response, but actually a community of organizations, their perspectives and views on that particular company can be really enriching of your internal decision processes, yeah?
And I would just add on to that, that once you've tacked on to that community information, make sure that you're recognizing what package of cloud service they are having with that particular cloud, because the management obligations are a bit different. And as soon as you know what those management obligations, whether it's both or them or you, then you can start looking at the controls that really need to be put in place.
Perfect. Well, it looks like we're at the top of the hour here, or bottom of the hour, whichever people would like to describe. We did have one more question. It was, how does Prevalent quantify risk? Does it use the FAIR approach? It was from an anonymous person, so I can't even sidebar them, unfortunately. But if you guys have the chance to just quickly go over that.
I think that's more you, Brenda.
So we are looking at a FAIR-esque approach. It has not completely been embedded into the platform yet. We're taking an approach that's making sure that when we look at the FAIR model, we're doing it for value of the customers and the recipients on the supplier side. So we do have the capability of putting in cost, we do have the capability of using risk, and we also have the capability of doing the metrics. And then we're looking at enhancing that into a FAIR-esque model, and there's more to come on that.
Perfect. Thank you so much, Brenda, for that answer. All right, we are all set, everyone. Thank you so much for joining. Bryan, thank you again for this. It was absolutely insightful. Hopefully everyone enjoyed it. You'll get the recording tomorrow, and have a great rest of your day, everybody.
Thank you, everyone.
Bye.